get to the bag, ayy. Got the foot on the gas, pedal to the metal when the lane moving fast, ayy. Let them all cross. If they hate, then let them hate and make a bigger boss, ayy.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I do say that before every single show. And what I mean by that is I only speak with transportation professionals, because at the end of the day, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve. So you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Tuesday, everybody. I got a very special guest for you guys here today, and it's honestly one of my favorite topics to talk about. Some people hear the word insurance, they instantly get anxiety. I know I do, with all the premium increases I've seen across the board here lately, but like, I want to have a better understanding of what's out there. If you're a broker, the carriers you're sourcing, the exclusions, all of that stuff. And my friend Jeff Gordon has agreed to join the show today to break all of this down with us. So Jeff, thank you so much for taking the time to join us today.
Man, thanks for having me. You just gave me anxiety using the words professional and insurance. That's setting the bar here.
Oh man, I love it. So dude, it's been a while since you've been on the show, man. And, I'm glad we reconnected here recently, because I see a lot of stuff out there, and, you own your own company. I own mine, and, my health insurance, just to talk on that for a second, everybody's health insurance premiums went up this year. And it was, I was more prepared than some. And like, when it comes to like the sticker shock that comes along with it. Yeah. And then with my commercial policy, right? Because like I'm an S Corp. So it's like, I have a commercial policy here. I have a truck, a pickup truck in my business's name, everything. It's a work truck. So it's a commercial policy. And that had like a 6% premium across the board that went up. And my agent told me about that. And I'm like, I got, like, knock on wood, man. Like, I got a clean driving record. I got all of this stuff. What leads into a lot of this? So I kind of want to start there, man, for all of those people out there that are like, I have these policies. We have clean records. We don't have any claims. Why is our stuff going up? So like, what drives that?
Yeah. So, and what you see is common, man. That's, as we're preparing for renewals, usually we tell people, flat is a best case scenario, or 5 to 7% bump is kind of a national average on what we're seeing. What drives it? The nuclear verdicts that we see, but ultimately it's litigation. In my opinion, the nuclear verdicts obviously don't help, but it's a smaller, it's the unnecessary claims, in my opinion. The frivolous claims that, should be maybe a $500 bumper replaced that turn into a $40,000 chiropractor bill and so forth and so on. Those kill the little guy, and I don't know the firm number right now. I know at one point, 3 or 4 years ago, average loss ratios for commercial auto, specifically trucking, were like 130, 140%. Nationwide. So, if you're in the traditional market, a traditional policy, the top 20% are paying, subsidizing the bottom 20%. Yeah. So those insurance carriers have to spread those losses around, even though, like you said, you're claims free, no issues. They got to spread those losses around that they're seeing. But one thing we're seeing is CSA scores, your basics dictating more than your loss history. We've had some top insurance carriers completely decline to quote solely based on, if you got 2 basics that are running a little hot, close to threshold, clean 5-year loss history. I guess that data trends it. It's just a matter of time before something happens. And when something happens these days, unfortunately, it turns into, pretty big loss.
So I want to talk like that ratio that you were talking about there, Jeff. And for those of you who are watching on YouTube right now, the streaming platform that I use, so it looks like my face might be cut off. This is all kind of new. They just implemented a lot of this from the formatting. So we will get this fixed by tomorrow's show. But I just wanted to let that out there for those of you who are watching on YouTube. If there's a vertical stream, that's coming through. My entire face is
you're cut off and I'm huge.
Dude, you're looking good over there, man.
Bump back a little. I just realized that. Good grief.
Yeah, but no, we'll just minimize that, and I'll have my team fix it. And again, you guys, I literally just figure this stuff out as I go. The streaming platform that I use, StreamYard, offered that, and they said it was recommended out there, but we'll get it fixed. But I want to talk about what you're saying there about how like the 80-20 rule. So was it the top 20% subsidized, the bottom 80% out there?
Yeah.
So it's like, and that's the thing is, man, is I feel like with a lot of people, when it comes down to insurance, for example, like you get punished no matter what, right? You do the good thing, you get punished. You get in an accident, you get punished, it seems.
Yeah. Yeah, it's kind of a damned if you do, damned if you don't, world that we're in right now. But yeah, the top cream of the crop, are subsidizing those bottom, poor performing operations, and then you look at, I don't want to get into captives on this one, but we've looked at captive plays for your larger operations. But the margins are so thin, to get in a captive, you got to be really financially solid with pretty good reserves. And even your, mid-sized fleets now, that, their top line may be, $15-20 million in revenue. But their margins are so thin, it's even hard for them to get in a captive just with the collateral, the investment in that program, because a captive is truly the only way to, you're only rated on your operation. Nobody else is loss ratio or losses are factored into that. But the last few that we've looked at it, it's been difficult, for them to justify getting in just because of the cash they got to come off of to get into the captive. So interesting times right now on the insurance front.
What are the biggest things that lead in? Like, I guess, nuclear verdicts is like the top thing that's been on everybody's mind here for a while now, and especially down in your state in Louisiana, man. You guys got an entire system geared against the drivers when you have the judges and everything else involved.
Yeah, man, we don't, and as a Louisiana agency, I don't pursue business in Louisiana. I realized a few years ago, if I'm going to have an agency that outlives this market, we've got to get out of state. So, we're in 7 states now, but we don't even, we work referrals and, local stuff if it comes to us, but we don't pursue business here because most of your quality operations are already where they need to be insurance wise. But yeah, it's brutal here.
So what could a trucking company do to protect against nuclear verdicts, right? Like, I feel like there's got to be something that, is it having a better understanding of their policy? Is it, maybe challenging their agents a little bit to push back on like, hey, why are we cutting this? What does this actually mean? And actually seeing what the policy is, because I feel like there's got to be something, right? Like there can't be a continuation of punishing carriers for a couple of bad ones out there. Like, that collective, like it has to stop. Otherwise we're just going to drive more and more people out of business.
Yeah. And usually your nuclear verdicts there, it's not about the actual accident. The trial attorneys get in there and they dig into all the things that you're doing to not be safe. So is there anything you do policy wise, to prevent it, push back from an insurance standpoint? Not so much, but you can be proactive with your safety. If you have a driver that, gets a violation, if he merges in and sideswipes somebody, be proactive with giving that driver attention, review what happened, give him a safety training and document. Because that's what the attorneys, when these things get to trial, they say, well, look, here's this history. Here's all these drivers that had these violations. This motor carrier didn't do anything to address them. There's nothing documented that they're not, fit to be on the road. They should not be running an operation. This accident wouldn't have happened had they been, more hands-on with their safety and their training. So things like that. And again, you and I probably have the same faith in our, judicial system. So will that prevent a nuclear verdict? I don't know, but that's your best, case against it, is be proactive in your safety management.
So like, I know a lot of people are against cameras, right? Like very much against it. Do you think that is a great step? Because I like, and this is like, I don't stand behind this at all, but like drivers are guilty until proven innocent in today's day and age. And I'm not here to argue with like, it's wrong. It's very wrong that that's the case. But like, do you think as a fleet owner, this is why you need at least outward facing cameras? And I look at like, obviously on our company growth, like we're going to own trucks one day, right? Like it is 100% in our business plan to own trucks and have that out there. So it's like, I look at a lot of this and I try and put myself in those shoes. And it's like, to me, it's a no brainer because drivers are, again, guilty till proven innocent. I've seen it so many times on the loading side where, and again, like I don't do dry van freight anymore, you guys, but like when I did, it was only food grade stuff. Anybody out there who's ever moved a food grade load knows they will not put one pallet on a trailer if there's damage to that trailer. Somehow they get 6 pallets on there and then they notice a big gaping hole in the side of the trailer that happened to be caused by the forklift driver, but the forklift driver's blaming the driver at that point, right? So it's like, again, I'm not here to argue about that, but it's like, do you think that adding cameras to your fleet is a great way to absolve you from a lot of this unnecessary litigation?
Yeah, 100%. You beat me to it, you know, and that's some of my old school guys that have fought me on it for years. Don't come across this desk, but you're guilty. you know, the billboard already says you are, you know, the judge already assumes you are. So that camera is our only chance to prove that we are not. And when you put it just bluntly like that, I don't think I've had anybody not come around. And even in, you know, and I get the privacy with the driver facing, but again, you know, it can help get us out. If we're guilty, we're guilty. It's going to come out, but that can't prove innocence or prove we're being safe. So 100%, we always suggest cameras, you know, especially now with the telematics, you know, insurance is going big in telematics. And so it's becoming a requirement anyway. You know, back when they first came out, you get a little pat on the back and maybe a little 5% discount or 1% discount, you know, for having them. But now it's almost mandatory for most insurance companies anyway to have those.
To have outward facing cameras or
yeah, outward.
So like with that being said, how is there like, again, I'm not like, when you look at highway safety and everything that's going on, like, you know, I've had a couple of safety guys come on the show here and, you know, they post a lot of videos. I don't like showing that stuff on my platform because it's like, I don't know. I hate seeing people getting killed. I don't know. Like maybe I'm just weak, but like, how can they use this to actually benefit their policy though? Right? Because like I see it and it's like, if it's a requirement out there by the insurance companies, why is there still such a giant target on trucking companies' backs when it comes down to it?
Yeah, it's interesting. Yeah, I mean, that's you know, everybody pretty much now is running cameras. So I don't know. Good question. But yeah, I mean, in the event, you know, it's a he said, she said. You know, they say we merged into them, but our forward facing shows we never deviated from our lane at the time of impact. Well, you know, any attorney chasing that, when we can flip on that dash cam footage, you know, any ethical attorney should walk away at that point. Now we've had some where you know, the same claim keeps coming around because they burned through 4 or 5 attorneys. You just got a persistent claimant that's just really trying to sell the thing. But we've honestly had them where we've produced the same film and we've had 5 attorneys walk away from a possible deal. So just little things like that. Had we not had a dash cam, who knows what it could have turned into when you get that persistent of a claimant. You know, it could have been a $40,000, $50,000. And if you're just a single truck operation paying, you know, $15,000, $16,000, $17,000 a year, now your policy's just paid out double or triple your policy. You're going to see your rate increase at renewal, and it's going to be difficult. You know, no other insurance company is likely going to want to take you on because they're looking at, you know, well, this policy, you know, just paid out 3 times what this guy paid in. We're going to need to see, you know, 3 or 4 years of clean history before we want to bite on that.
What is it, you know, like right now there's a big thing, and especially I think a lot of this is it's market driven. There's a lot of people who are exiting the industry, and unfortunately fraudsters and scammers are offering a lot of cash to take over somebody's operation right now. And how are you guys on the insurance side of things trying to identify some of this stuff, because like, again, they're like, I look at it as a lot of them that are fraudulent are trying to pose as a legitimate business just for a short amount of time to do what they got to do. And again, like, how are you guys noticing any of that stuff? And are you guys denying policies based on that, where it's like, hey, how are you associated with 4 other companies, you know?
Yeah. So for my agency, this is my baby. I started it from scratch. We're almost 12 years old. I've been on the trucking side of insurance almost 20 years. So we pre-qualify very heavily, before we look at taking on a new, motor carrier partner. If there's red flags, or we can tell there's trying to get away from something, it's a hard pass from us. So as far as our customer base, we're pretty particular about who we want to work with. But it's like the Wild West. It's crazy. We've had claims come in and it still boggles my mind on how a motor carrier's identity can be stolen. Just this year, we've had probably 2 or 3 claims come in. We get notice of a claim and we go to looking at the policy. We're like, we don't have that unit scheduled. So then we hop online and we realize information has been changed on their MCS 150. It's a different phone number, different address. And I guess that was earlier in the year, or maybe the end of last year, before FMCSA went to having to snail mail those type changes.
Yeah.
But yeah, we've had a few cases where there's been a cargo claim on one of our policies where that driver was no part of our claim, but somehow they were able to steal that trucker's identity, book a load, basically steal the load. So, we prevent that on our side by qualifying who we work with, but I don't know the answer to preventing that in the marketplace. Thieves are going to thief.
Yeah.
I heard one story last month, a car hauler. This driver came on, he passed all background and everything, drove for about 2 weeks, then vanished with a full load of motor vehicles. And obviously that was a strategy and the intent from the start. But yeah, it's a Wild West when it comes to the fraud and theft out there. And I'm not sure how to help combat that.
Because that was going to be my follow-up question, Jeff, is how could a legitimate business fight that, where it shows that their identity was stolen, whether it's through phishing or, whatever, and somebody was able to access that, book a load, and then they steal it, or they cause cargo damage in the process, because like they're trying to build up that credibility, because again, it's like, hey, let's work really well for them for a couple weeks. Let's gain their trust, and let's take a bunch of freight. How do you fight that? If that came to you, say I owned a trucking company, my identity was stolen, somebody was booking freight under my authority, unbeknownst to me, and then they cause damage like that, or they steal a load. How do I fight, and how do I show that, Jeff, this wasn't us? Like, it's very clear that this wasn't us. All of my trucks have cameras. All of this, that unit clearly is not under my policy. Yeah,
well, and that's in this case that we had, it was pretty easy because there was no record of that vehicle ever being owned, and so that was pretty cut and dry. And of course, the carrier denied coverage. We were able to get his MCS 150, everything back in control and under his name. But to speak to that, I think that's where on your side, brokers and insurance, there's got to be a way to work together other than just using Highway app or RMIS. That's just kind of a boxes check type thing. But like for our agency, when we send out a certificate of insurance, it's got the units that are insured under that policy. So it's got all the scheduled units. It's that certificate's issued. It's got an issue date that shows that it was issued that date. It's signed by us, which I know there's a lot of fraudulent certificates going out, but there's got to be a better way. And it might just be getting back old school, not using all the technology. That freight broker calling the agent to confirm, hey, we're booking this load. Can you confirm? Because we used to get those calls all the time.
Yeah.
And I would say up until the last probably 2 or 3 years, those have stopped. Everybody's wanting to use the automated and the technology, which I guess that's where it's a blessing and a curse. But I think that's where brokers and insurance need to get back to working together and communicating directly instead of just relying on, the third party compliance that, hey, this is on an up and up.
Yeah.
policy.
So let's talk about that from a broker's perspective, right? Because like we're out there. What are some of those vetting situations? Do you think that goes in addition to, because I mean, vetting software I feel like is going to be here for a very long time. I don't see that going away.
Yeah.
But like, do you think like what could brokers do? Because like at the end of the day, I hate to break it to a lot of people out there. It doesn't matter that you have insurance. Like your customer is going to look at you because they're not going to pay for that. They're not going to pay for that damage. So, and then if you don't have the capital to do it, like what are some of those additional steps that brokers should be taking here to protect their business? Is it the exclusion list on their policy, Jeff? Is it like, what are some of those things? Is it calling you and be like, hey, Jeff, this guy's calling me. Is this legit? Do they have this? This is the commodity.
Yeah. So several things, and we're noticing like highway. I know they request a copy of policies now. Like once us on the insurance side submit a certificate, then we typically get a follow up for a copy of the declarations page of the policy, and I guess they review that for exclusions. But there's so many exclusions now. We were talking about before the show. Some recent ones we've had have been oversized or overweight limitations on a policy.
Can you define that for the audience? The oversized overweight exclusion.
Yeah. So we had a recent policy, and thankfully we called it in the small print of the policy. Any load that was over, which it was interesting because the exclusion was under legal weight. It was like 46,300 pounds. So it was just like 1,700 pounds off what legal weight is. At 48,000 for a load. But basically the wording was, we will not cover any loss for any load that exceeds this weight limit. That's kind of a big deal.
How common is that? Because like, I'm saying that as a guy who's like 100% open deck, right? Like I'm literally picking up freight today that's 47,000 pounds.
Right. Yeah, I wouldn't say it's very common, but it's concerning to me because this was from a very large, reputable, A-rated insurance company. This wasn't a surplus market, a fly-by-night. So hopefully that's not the trend, and I'd never seen that before. But that's just one of those things, on the agent side, you got to communicate with your motor carrier on, all right, we need to know exactly what you're hauling, and then make sure your policy covers that. So there's another one recently, one of our insureds. It's a new account we're working on now. His agent didn't have him. He's dedicated, oversized, overweight. He had a loss for something that was oversized, and it wasn't covered. His $60,000 cargo loss. So now he's on the hook for that. Which of course there's pending litigation because his agent supposedly knew what he was hauling and just put him with the policy because it had a better rate. So. With that said, cheaper ain't always better. But the oversized, overweight is common. Unattended truck exclusion is a common one we're seeing. Whereas
what do you mean by that, unattended?
So if there's an unattended truck exclusion, that insurance company will not pay if there's a loss while that truck is unattended.
So if a driver's on, just for context for brokers out there, if a driver's on a shutdown or if he's at home for the weekend and he has a truck parking facility or at a truck stop, and the driver's not physically inside of the truck.
Right. Yeah, correct. So if that load is stolen, and it's unattended, he's, like I said, he's got it parked there on the weekend waiting on delivery for Monday. That's a pretty common exclusion. And on the flip side, we have policies that actually have endorsements to cover that. And sometimes there'll be a sub limit. So it might be, we'll cover an unattended truck, but maybe up to a certain limit, or it could be up to policy limit. So those little things are important to know on the policy. But back to your question, I think you just got to go back old school and pick up the phone, which I know that's tedious, but it's, hey, Jeff, we just got this certificate, we're looking to book this load, set up this new carrier, we're on board and whatever. We see it's got these 3 trucks scheduled. Can you confirm that's the proper trucks? Here's what they're going to be hauling. Can you send us over, their exclusions, their deck page? So just going back old school and confirming things that way, I think is best practice.
Yeah, I just think like we're at an interesting time where when it comes down, like with technology and automation, it's great, but I also look at it as it could lead to a detriment to your business if you don't know how to operate outside of that, right? Because like I love technology just as much as the next person that's out there, but I feel like we could all successfully say that we become too dependent upon technology, and then we overlook some very obvious things. And, again, I'm sitting here talking from somebody who I've been brokering freight for a very long time. And I know cargo theft and fraud is a very real thing for a lot of operations that are out there. But I have found that the tactics are the exact same as they've always been. And I've actually refrained from speaking about this publicly because I don't want to give a leg up to some of the guys out there. So if you want to find out, and you see me in person, I'll talk to you about this in person. But there's a couple of very key identifiers to me that will always deter me from ever booking a load with that. And then the digital presence is a very real thing. If you're going to email me about load details, if I'm posting a load, I will never give you a load without talking to you on the phone, because there's a couple of things out there, man, where I will not book you if you can't answer some, and it's very basic stuff, man. Back to as simple as me calling you and be like, hey, Jeff, I'm trying to get this carrier. I need to be listed as a certificate holder. Is this commodity on it? Are we good? Are they actually insured by you? They are. Perfect. And it's just those little things like that. And I see a lot of businesses going away from it. And I get it. You want to get quicker. You got to get faster and all of that. But at the end of the day, man, I've said this often, lawyers and insurance companies are hoping you skipped a step so you are liable.
Yeah, I think you're leaving yourself wide open by embracing efficiency over, let's say, effectiveness, for lack of better terms. I mean, and honestly, it's gonna take you a minute and a half to make that phone call to confirm. Hey, this is a legit motor carrier. These are the units. Here's what they're hauling. Can you just give me a verbal, and then you document on your end. And the insurance company, we document on their end. Hey, or my team does, anything that happens on that file, receive call from, the freight coach confirming, power units and commodity, power units, commodity confirmed, that's.
And then I would say this from a broker's perspective, I would always require that if you're going to have a carrier send you their certificate of insurance, ensure it comes from their agent. Don't take it from the carrier themselves. It's just a couple of little things like that. Cause I know that there was a thing for a while there, and I don't know if this is still a thing, Jeff, where they could go on and add brokers as a certificate holder themselves, that the insurance agent didn't need to do that. I would always go directly to the insurance agent and have it come directly from them. Just another verification step, another protection point for your business.
Yeah. And we have that, we have a 24/7 portal, and I invested in that technology early when I started my agency as a one-man shop. It'd be the weekend and I'd see, get an email, because that guy's trying to book his load for Monday. Well, whatever I'm doing, middle of the kid's birthday party, I'm going to drop it, get that certificate out. But when, through our portal, it notifies us that a certificate holder has been added, and it notifies us that it's been sent, but it actually sends through our agency. But it's where the motor carrier can do it themselves, but it still comes from us, and we're notified that way. If somehow that portal gets hacked, which knock on wood that hadn't happened. Yeah. We can confirm, hey, we see this, this just looks odd, red flag, something, but we get notice on anything that's sent through our portal too.
No, man, I love it. Jeff, thank you so much for your time. I'm going to have you back on. We're going to have to do more of these. We got so much to cover with this, because I feel like this is one of those things that it's going to get worse before it gets better. And I'm not trying to say that from a fear mongering perspective for people. I just want them to know that you have to protect your business. And if you're going to automate certain things, which again, I'm a fan of, you need to be able to know how to manually do some checks and balances out there just to ensure, because again, you overlook one exclusion, heaven forbid there's damage to that product. Your customer is going to be looking at you as a broker, because that carrier is going to deny it. They're going to go on and say, you shouldn't have booked us. And then you're going to be looking there at possibly $40,000, $50,000 claim out of pocket. I know some of my friends who own brokerages that had to pen a 6-figure check to keep a customer after they had made that mistake. So again, it's just these little things like that. Like I always say, take a couple of minutes on the front end to save you hours on the back end with that. So Jeff, thank you so much for your time. How does anybody reach out to you though, to find out more about what you got going on?
Yeah, man. Thanks for having me again. So the Bayou Agency, we're Louisiana, so Bayou, BAYOU agency.com is my website. My direct line at my office is 318-450-3737. I'm happy to, I live this, once trucking, transportation gets in your blood, it's there. So like I said, we could sit here and talk all day, but that's ultimately, I want to help, your audience, your brokers. And I really feel like, the freight side and the insurance side have to reconnect. So anything I can do to be a resource, I'm happy to help.
I appreciate it. If you guys can't find Jeff out there at all, hit me up. I will gladly put you guys in contact with him. But that's going to be it for today, ladies and gentlemen. As always, if you got value in what you heard, subscribe to the show, you guys. And if you're feeling ambitious, rank it on iTunes and Spotify, because if you see value, your network's going to see it as well. I appreciate you guys. I love you guys. And we'll be talking to you soon.
Came back with a bang, window down, yelling out money, anything. Hey.